Today we will tell you some secret and untold money habits to get rich by 2023. Now let's start. 1. Pay yourself first. Make it a routine to pay yourself. This implies that you deposit money into your retirement and savings accounts before you pay the first payment. One of the finest financial habits you can have is to take care of your future self. Set up the accounts you have, a savings, 401k, IRA, etc., to deduct funds from your paycheck automatically. 2. Live below your means. One spending behavior that many successful people have in common is that they prioritize not living over their means. In other words, their income exceeds their expenditures. They do not make an effort to keep up with the Joneses. They do not load themselves with mortgage payments that will make their retirement a hardship. They spend and invest money in accordance with how much they are earning. To determine if you are living over your means, carefully examine your income and outgoing costs. If you are, decide where you can make savings. To get regular financial updates, subscribe our channel. 3. Invest in new businesses. Invest in startups while you figure out how to get rich. If the business succeeds, either goes public or is purchased by a bigger company, investing in the stocks of one or more startup companies might prove to be very profitable. It's vital to keep in mind that the chances are not in their favor because very few businesses are able to make a sizable profit. You may decide which business concept and management group will thrive by using common sense. Due to investments made in them while they were still startups, employees at Apple, Google, and Microsoft are now millionaires. 4. Create and stick to a budget. Examine your money, expenses, and spending patterns carefully. Make a monthly budget using this information and adhere to the live below your means financial principle. Add retirement and savings as budget line items. After then, be sure to stick to your spending plan. Download a budgeting software, like Mint, on your phone and start keeping track of your expenses. Well, all these are okay, but the habit number 10 is my favorite, however let's move on. 5. Discover new things every day. Learning something new every day is an excellent habit that everyone should adopt. We do, however, advise learning something new about money-related topics every day in order to develop good money habits. Look for answers to your current financial questions as a starting point. Read books and watch videos, as well as tune into financial newscasts and podcasts. Entrepreneurs claim that the majority of millionaires stated a determination to never stop learning, developing, and improving. 88%, or nearly 9 out of 10, said they read daily to learn more about their line of work and the business. More than 7 in 10, or 85%, said they read 2 novels or more every month, and 63% said they listened to podcasts or audiobooks while working out, doing chores, or commuting to work. 6. Use credit cards responsibly. Using a credit card to pay for things you cannot afford is one of the worst money practices. This does not, however, exclude the usage of credit cards. Just use them prudently. Make it a practice to only use your credit card when you are certain that you are able to pay it full at the end of the month, without incurring interest. If you utilize a credit card with rewards in this manner, you may profit from it without being concerned about accruing debt. Start paying off your credit card balances and only spend what you can afford to repay at the end of the billing cycle, when you do use a credit card. 7. Organize your shopping. Purchasing on impulse is one of the worst financial habits that people have. Your finances are depleted by the accumulation of all those small impulsive purchases. Shopping for the sole purpose of gratification or to kill time might be justified in the same way. Shopping with purpose, in comparison, is one of the best money practices. Try to limit your purchases to items that have a use or will last you a long time rather than those that will make you happy in the short term. In light of this, make a list and stick to it the next time you go shopping. 8. Keep an eye on your money. You should break the habit of not checking your bank accounts, 401k statements, or other financial reports as soon as you can. For the sake of financial planning, you should constantly be aware of the balance of each account. As a result, become familiar with reading and comprehending your 401k statements. 9. Refrain against lifestyle creep. When you start earning more money, the temptation to upgrade your lifestyle is strong. Avoid doing it. Lifestyle creep is what we call this. The focus on frugality and avoiding lifestyle creep, in the words of wealthy individuals, is a big part of building wealth. So, 64% of millionaires said their homes were modest, which is how they would characterize them. As well as during their free time, they maintain a thrifty attitude. 96% of respondents reported spending less than $6,000, and 41% less than $3,000 a year, respectively, on trips. As for gambling, 84% said they never do it. Make adjustments to the investments and savings you have instead of changing your lifestyle to meet your new income. Consider saving before making your next major purchase, a trip, a car, etc. 10. Have a meeting with a financial advisor regularly. Your financial condition will be advised by a financial counselor, precisely as it sounds. Make an effort to consult with your financial advisor, if you already have one, to determine what adjustments are necessary to increase your wealth. If you don't already have one, you should look for one right away. One excellent money habit is to speak with an expert and ask questions. For instance, according to David Blanchett, head of retirement at Morningstar and a CFP and CFA, individuals who got professional advice compared to those who received no assistance at all had up to 40% greater income throughout retirement. 11. Investing in your future. A wise financial habit is to consistently contribute to your retirement. Living in the moment makes it simple to put off saving for the future, but your future self will depend on you much if you develop a regular retirement saving habit. You don't want to have a retirement that is less than ideal for you or force your children to take care of you when they are only beginning to take care of themselves. Boost your retirement savings. Over time, even a little increase of 2% in contributions has a significant impact. In order to match any rise you receive, up your contribution. That's all for today. If you learned something new, then do press the like button and also subscribe our channel. Thank you.